Hi friends, Simit here from InformedTrades.com. Today is Friday, February 7th, 2014, time for our daily Forex chart review. Basically, in this session, I review the Forex charts that I'm looking at, 20-some currency pairs, share the trades I'm placing, the updates to existing positions that I'm placing. So let's get started. Okay. Uh, right now we're looking at Aussie dollar, which I have a short position on at the moment that is currently a little out of the money. The black line is where I entered. The red line is my stop. We'll see. I'm not going to take any action on this at the moment. Just the orders in the market filled. Let's see if it hits the stop. Let's see if it goes down. The profit target, this green line down here. Let's see how things progress here. So no action to take on Aussie dollar, and my risk is still exposed on that, meaning I haven't moved my stop to break even. That's something to bear in mind to determine how much aggregate risk I have in the market, how much I'm willing to take. Like I mentioned yesterday, I mentioned repeatedly on InformedTrades.com, I don't like to risk more than 1% of my account value. That's pretty conservative. That allows me to, and that's something, obviously people, depending on their risk tolerance, how much capital they have relative to their overall net worth, to decide how much they want to risk with their trading account. I like to be willing to put a larger amount, but that means I have to be willing to have a very low drawdown, large amount relative to me. Okay. Right now we are looking at euro pound. This entered at the black line, the stop of the red line. The green line here, it's a little in the money at the moment, right? We can see the price is below. It's a short trade. In general, I think this is okay. I mean, the price action so far is not a huge concern. It would, I suppose, have been nicer to go down immediately rather than have this big green candle. It's a little concern for me at some point on some level. I won't be moving my stop until it closes below this orange line. So if we can close below this orange line, then I'll move my stop to break even. Of course, if the price goes up and it hits the red line, then I'm stopped out. So no real action to take at this point. Let me actually take a look at the 4-hour chart, though. Just out of curiosity, largely. Okay. So this is a little better. I'm going to delete this line when I draw it. Okay. Or I'll keep it on, but I'll make it thinner. Change the color to a grayish color. Okay, and we'll make it dashed or dotted. Okay, you could argue this level is a resistance level. The market did bounce off it, so that's good. In hindsight, of course, hindsight's always 20/20, but it may have been advantageous to enter at this point. I entered here based on this level. So we'll see. At this point, no real action to take, just waiting. So this one also, my stop is not at break even. I have my risk exposed here as well. Another trade I have on at the moment is pound dollar, and let's get to that. Now I'm long pound dollar, and this is not yet time to move it to break even, but I do really like the price action the way it's setting up. That doesn't mean, of course, that it's going to go in my favor. Hopefully it will, but I'm confident that this was I'm confident in the analysis. So whether or not this trade goes in my favor, it meets my criteria, which I think is an important thing to remember. Even if you can place a good trade, and it can still be a loser, and that's fine. The thing is, over the long term, over a data set of 10, 20, 50, 100 trades or more, you want it or you need it to be correct. So this is, if you have a method that gives you an edge over a series of trades, 100 trades, 200,000, whatever, it's going to net you a profit. That's almost the definition of a good method. But the key is that you're sticking to that method for all the trades, including, so that means you could have a good method and you're going to have some losing trades. So the criteria of whether you're trading well is whether, one, you have a method that works, right? That's necessary. And two, whether you're consistently trading that method. So in this instance, at least for me, I am consistently trading this. I really love to see these candlesticks here. We are in an uptrend that's clear. We have had a pullback to a major support level that was confirmed by a reversal candlestick, so I entered. And the reward risk is favorable. This is at least 3 to 1, more than that. So, so I like that, and I think that's it's a good trade on that grounds, even if it goes against me. Not able to move the stop to break even. Again, this orange line. Often I'll try to do that more, just to be more precise with my thinking and to communicate it to those who are watching this video. If the price closes above this orange line, closes and not just breaks through but closes. So this candle here wouldn't count, for instance, because it just spiked above and it came back down. This candle would count because it did close above it. So if we close above this orange line, then I will move my stop to break even. So risk is still exposed on this one. And the last one where my stop is already at break even is New Zealand dollar, US dollar. Okay, so this is going well in my favor. Now it did hit that the dashed gray line, which I identified as the near-term support level, and did not and sort of spiked off that. However, I don't think there's enough evidence of a reversal just yet. And with the trading range, I really feel with this one, well, is that a 3 to 1? I'm wondering if I should take a partial exit at 82.71. I think that may be something I will do. I'll come back to this, but I may put an order on to take a partial profit at 82.70. I'm just noting that down. Okay, so we'll come back to that at the end of this video. Let's go through some other pairs, starting with the euro. Euro Aussie. Okay, now this is interesting, right? We see a long wick pattern right off the support level. This is the kind of thing that gets me very interested. Let's take a look at the 4-hour chart. Okay. So I will look, as those who've been watching these videos know, I like to go through all the currency pairs, identify what strikes my interest, and then come back at the end. Because there may be, like in this particular instance now, I've already got 3 positions open where my stop is not a break even. So I really have the opportunity to only place one more order based on my risk tolerance strategy, which I'm going to stick to. Even if those positions are currently in the money, they could, who knows what will happen in the session, could go against me. So I don't want to risk more than 1%. Euro Aussie though, I can definitely see an opportunity on this. Putting the stop. It can go here maybe. That might be too far. Oh. It needs to be red, it needs to be thick, it needs to be solid. Okay, so that's probably too far. But if we target this high here, make this green. Okay, this is risking 250 to get, does it work? 257. Yeah, so this would actually work. Okay, we'll come back to this at the end, but this might be the setup here that you're seeing. Enter at 50.15, stop at 47.58, target 58.36. I'll run the math. I think that's more than, yeah, because that's a 820 pip move to the upside that's being targeted, 825, and we're risking about 260, right? So that's more than enough. It's greater than 3 to 1. Of course, what I have been doing is, if you see there's some near-term resistance, if you see a market stall there, I'll sometimes take half off. Euro Canada. Okay, this is not like I mentioned. I really like to see a trade, at the support level. So this would have been a potentially interesting level to buy at. I didn't because at the time it wasn't. I wanted more of a pullback, which is fine. But I generally don't like, and I mentioned this before. Some traders will buy here on the grounds that it broke out of the price channel and now it's retesting. I'm not a huge fan of that just because I like horizontal lines more than diagonal ones. But for those traders who were seeing this as a breakout of the channel, come back, retest it. If they went long, it's currently going in their favor. What I like that's supportive of this is a long move in the euro. And this looks like a bullish setup here. We are seeing some consolidation. Looks like it could head higher. That favors my euro Aussie trade, which I was just looking at. I haven't put that trade on yet. Might put it on. Let's see what else is out there today. Euro pound we looked at. Euro yen. Yeah, still have this. See if it can fall a little more. Also with the yen, I mentioned I want to start considering the weekly chart just because it's really throwing me for a doozy. And the opportunity for the yen. Okay, so not much difference. Well, there's this level here that actually is the difference. The opportunity with the yen is long term. I mean, if you go to informedtrades.com/Japan, we have our whole guide to the Japanese debt crisis, which I think is huge. And I think that's a great long term trade. At the moment, though, short term, I've just found it a little difficult to analyze. So. This is a green candle on the weekly chart after 1, 2, 3, 4, 5 consecutive 5 weeks of a rallying yen. We're finally getting some a bullish candle this week, so that's interesting. That's interesting sign for those who wish to go long, and it's happening at this major resistance level. So let me just make that black, or major support level, I should say, previously resistance. Now let's go to the daily chart. Okay. This is interesting. So another way to look at it is, well, let's see. Let's keep that where it is. I might place an entry order to go long here at 136.06. So let's see. We'll come back to this. Possibly in order to place on the yen, euro yen. I haven't had much good fortune with yen trading, but that's an instance where you don't want to be motivated or affected by those losses. If you want to analyze your trades, if you made a mistake, learn from them, but don't let it paralyze you and have that fear. That's actually getting a little off topic, but not too much. I've studied neurolinguistic programming a little bit as a way of training your mind, so to speak, to disassociate, um, to remove the penalty or remove you as a hindrance to you negative associations in your mind. So that's something that is actually, I think, very useful for traders, where you have this negative association with. So, for instance, I have a bit of a negative association with the yen because I've had a recent string of losses related to it. But that's something that I need to get past. I need to start associating in my mind the yen with positive emotions, or positive, or at least non-negative. Anyway, I think things like that are important to monitor. Trading is largely psychology. I think more than half of it, is not so much the analysis, but just being able to maintain your psychology, understanding what you need to do. Losses are probably going to occur, and being able to accept that, while still, of course, being focused on having a strategy that wins overall and makes you money on the long run. Okay. Euro kiwi, no real opportunity here, in my opinion. We're still in that trading range. It's a little choppy, and I don't want to trade anything in a range like this. So now we are at euro US dollar. Okay, we did have that big, and remember, if those who are watching, I was thinking about buying here. I did buy pound dollar instead, which is going in my favor. This would have been perhaps a better purchase, but you live and learn. And I still like the analysis on the pound. I feel pretty comfortable with that. Or at least technically, I like the setup a lot. We'll see what happens. But in any event, that no opportunity on euro dollar just yet. Maybe it'll come back down though. We're still in that range, and we are testing the top of this trend line. So it's currently been favorable from here, but we'll see how it ends up. Pound Aussie. Okay. So this is similar in a way to Euro Aussie. I like the Euro Aussie setup more, but you can see this is also looks like it's going to head up, which is bullish for the pound and bearish for the Australian dollar. I have a short Aussie dollar trade on, so it's favorable for that. If we're going by correlations, which you can, or that's sometimes useful, but not always. Pound Canada. Okay. And this also looks like the pound is ready to head higher. This is interesting. I wonder if, okay, I really want to see a green candle. That's what I'm waiting for. All these candles are red. So we've had 1, 2, 3, 4, 5, 6, 7 straight red candles. That support level looks like it's holding. However, if today's candle is green, then it might be time to enter long pound Canada. The other concern I have with the pound at the moment is that I already have 2 positions that are not at break even that are long the British pound. So I really do not want to put on as another rule to make sure I'm sufficiently diversified. I don't want more than 2 until I can move one to break even. Which kind of makes it, what's the point of you looking at the pound? We'll go through it just for the exercise, but really, I'm not going to place a trade on the British pound at the moment. Pound Swiss, it's in this price channel. I found it very difficult to analyze, a little choppy. Maybe if it falls to the bottom of this channel, I'd be interested in buying, or the top, I'd be interested in shorting, maybe, depending on what else is going on. In this particular instance, in light of what else we're seeing with the British pound, I would, if it was at the bottom of this channel, I could see myself buying, or at least entertaining that idea. But now that we're in the middle of the channel, I think I'd rather pass. Pound yen. Okay, so we're also seeing some rallying here, and we talked about how the euro yen might be rallying finally after 5 straight down weeks. So this is interesting. I think I'm inclined, based on what we're seeing, to, so far, obviously I'm not trading the pound yet until I can move one of my pound positions to break even. But I am interested potentially in one of these long euro opportunities, euro Australian dollar or euro yen. We'll see. Largely, I'll do a risk-reward analysis, and whatever I think has the better risk-reward. That's usually the the way I prefer to settle. As a reminder, I only have room for one more trade on at the moment before I reach my maximum risk tolerance, which I usually don't have a full 1% on at any moment. Okay. Pound kiwi. We're still sort of in the middle of that big blue box. If we fall to a dashed blue line, right, which is the bottom of a trend line, that might be interesting, but probably not. There's also, I guess I should. I'm not going to do anything here because I'm finding it a little choppy. This is a little bit like pound Swiss. Make this a little thinner. But this has been established resistance. We did break through it a couple times. The market, you could argue it is a support level, and now we're here again. So there may be an opportunity to buy here. I just find it a little choppy. You could say buy here, buy here. So I'm not a huge fan of the way pound kiwi is shaping up. Maybe though, if it Okay, so the longer term trend line, if we could see a scenario If it goes into the next week and it's still at this level and this support level intersects with this trend line, that could be something that I'm interested in. But we'll see. Then I think I would be. That'd be a pretty. I think I'd find that to be a pretty good setup to go long pound kiwi. We are seeing a bunch of other signs to go long pound, right? Like we've seen. But in any event, like I mentioned, it's always look for a reason to not enter a trade. The reason to not enter any pound trade is that I already have sufficient risk exposure to it. Pound dollar we looked at the outset. Okay, so that does it for the pound. Let's go to the U.S. dollar. Dollar Canada. This is, Canadian dollar is still rallying after, for those who got long right around here, you may have had to hold it from, December 13th. If you got in early, let's say you got in at, December 11th, you may have had to wait until January 7th. So you were waiting, almost a month, but it was worth the wait because starting on this candle here, January 7th, we had our big breakout. And then we saw, a lot of people would have exited here. That's a clear spot to exit. January 23rd. So basically within 2 weeks, it moved 500 pips. And that's the thing, you get big moves like that, and that's really what you want to be capturing. Often you might have a big move like this a couple times a year. I think there are trading strategies, especially that's mostly in my 10 years of trading, or a little less than that. What's it been? 9 years. My profitability has largely come from a couple trades a year. Over the past couple of years, I've switched things up because before, that method did work for me. It got me about 20% a year, but the drawdown was quite a bit. Was more than I would like. So I did switch things up to limit my drawdown. Still working on that, but the idea, of course, is limit your drawdown and capture great moves like this. I think that's a great way to trade. In any event, dollar Canada, I'm rambling on here. Dollar Canada still needs more room to fall, perhaps all the way down here. Goes up fast, it can come down just as fast, if not faster. So we'll wait for the bottom on dollar Canada. And note that it would have been a great opportunity to short here. I didn't want to go counter trend. I've mentioned that a bunch in other videos. But that could be something. That is something I hope to add later this year into my trading skill set. Just watching and learning for now. Okay, so that's dollar Canada. Dollar yen. And this also looks like it could be rallying. Let's take a look at the weekly chart. Okay. So this is we had one bullish week, but 1, 2, 3, 4, 5, 6. 5 of the past 6 weeks have been bearish for dollar yen. But now it looks like we may be finding our bottom here, and we're seeing that with the yen on other pairs as well. So we'll see. I probably won't trade this. I like the euro yen setup more, but definitely something to note. And US dollar, Singapore dollar. Okay. Now we are. This is really interesting. The candlesticks here are a very nice sign. Plus, we are at the bottom of the channel. So this could be an interesting buying opportunity. Where would I put the stop is the question. And I know I had mentioned that I'd really like to see it fall to the 50 simple moving average. Let me see if I can move this line a little further down. And we could target here. Let's change this. Solid red or green. Make this one solid red to indicate the stop. And the entry point Okay, so this is the potential setup here. Long dollar Singapore. We'll see. I'm at least going to note this down. So the three pairs I'm considering trading at the moment are, Euro Aussie, dollar Singapore, Euro Yen. We'll see if now right now I have a short Aussie dollar position and a long pound dollar position. So my US dollar position is a bit neutral. I am short the Australian dollar and I could go long that again. Okay, well we'll see. We'll come back to this at the end. Now time to move to the Australian dollar. Australian dollar, Canadian dollar, Canadian dollar. And this is also potential short. I mean, well, now we're starting to curve upwards. We broke out to the upside and did establish a new. So now I think momentum, price action is a little bullish. Let me just draw a channel to illustrate this. Right, something like this, you could say. Um, and let me make this a little thinner. Okay. So I'm a little concerned that it's bullish at this point, and I wouldn't want to short Aussie CAD just yet. Okay. Interestingly, if we had reversed, if we didn't break through this, and closed above it, I think I would have been more inclined to short it. But we did break through and close above it, so that really changed my analysis. Aussie Swiss. Okay, so we did touch this line on yesterday's candle. That's also now a short, something to consider from the short side. Lots of good opportunities. Almost. I really don't. Every pair I'm looking at, I'm seeing a trade, which is it seems like, well, not every pair, but more than usual. Normally, I mean, I don't see too many opportunities. I prefer to pass on most things. Let's move this up here. Okay. So that's where we are. Now, where would I put a stop? If we enter at 81.42, that gives us 440 pips. That would be a good level. So I can put my stop right there, conceivably. Okay, so now we're risking 130 pips. We're targeting 440. Okay, so short Aussie CAD. This is another one. Okay, we only have room for one more. Okay. Aussie Swiss. I said Aussie CAD. Short Aussie Swiss. Okay. Aussie Yen. Okay. It looks like we're so basically, it was in this trading range for a long time. Now we're back in this trading range. If we can close below this red line here, that may be an opportunity. But it looks like, as we saw with the other yen pairs, looks like the yen is perhaps ready to start declining again. Of course, last time the yen was on its big decline, it did not do so against the Australian dollar. So we'll see. I'll probably pass on Aussie yen. I think there are other opportunities that are clear, whether I want to trade the yen or the Australian dollar. I think there are better pairs to do it against. Aussie kiwi. This is also a potential short opportunity, and I think I have an order on this, right? I think I've already got an order on this. I do. And the market is, yeah, it's at 109.08, just like it is illustrated there. And these are rally 60 pips before that gets filled. That's a short order on the Australian dollar. Okay. And then Aussie US dollar, we already talked about this. Okay, so I'm currently short Australian dollar. I have an order to short Australian kiwi. So I think I'm not going to. That eliminates for me the Australian dollar pairs. Okay, and that eliminates Euro Australian dollar as well. Okay, let's take a look at New Zealand dollar. New Zealand Canada. Still needs to fall further. 89.70 is basically this level right here is the earliest I consider something. Canada's been tough though because it had the huge, or all these pairs against the Canadian dollar, the huge run up. So now it didn't really establish support levels on the way. So I really want to wait for a significant pullback to trade that. But a great opportunity for those who got in on it. New Zealand Swiss. In that range, no real action to take at the moment. That level could be seen as support, but this is a really volatile pair, so if it can go to the top or bottom of the range, I think I feel comfortable with that. Other than that, I'd kind of prefer to stay away. New Zealand yen, kiwi yen. Okay, this rallied. Now this is also strengthening the case to short the yen because we're seeing, huge bullish engulfing pattern off the 200 exponential moving average right here. So that really strengthens that, maybe this was the bottom in the yen in general, or bottom in the yen pairs. But I don't think, there's no real clear setup. Maybe I could enter at this black line here. I don't know. I think there are other opportunities. Let's go back to I felt more comfortable with the euro-yen chart. This is sort of a level to consider, but if the market if we didn't have this movement here, if it just stopped here, formed a base and rallied, I would feel more comfortable with kiwi yen. But because we broke through, that possibly establishes, is this just a breakout and we're really headed down here? So I felt a little more comfortable with the euro-yen chart. And kiwi US, oh, that's right, we're still, okay, so now we're at the end, and the question is, okay, should I take half off here? And I think I will so basically I risked 50 pips, and we've already rallied 170. So I did get 3-1 at least already on this. So I'm going to take half my position off on kiwi dollar. Take half the position off on kiwi dollar. So book a small profit there. But now I wonder, should I? Now it's rallying, so actually I won't. I'll hold out till the end. If we see a clear reversal, so that yesterday's candlestick was a sign that, yesterday's candlestick at that resistance level of sorts. I'm debating. I'm wondering. Yeah, I think I should take half off. I think that's the right thing to do in this scenario. And that still leaves me a target of 83.70, and I still get 3-1 on this. So Let me do that now, or I'll do that as soon as I put on the other order here, and I'll have all this documented on my blog on InformedTrades.com. So definitely check that out. Um, check that out for all the trades. Okay, and I'll have text and commentary as well for those who aren't watching this video. Okay, so that's now what was the? Oh, we want to put one more order on, which now we don't want the Australian dollar because I'm already short Aussie US and I have an entry order short Aussie kiwi. So that's two potential shorts on Aussie dollar. Now dollar Singapore or euro yen is what it comes down to. Let's look at euro yen. Okay, and I think this is going to be clear. I think I'm going to go with dollar Singapore. Okay, well, now we've really broken down just that. In the time it took while we were looking at it, it broke down. So now I might not go with either, because let's look at the 4-hour chart here. Yeah, so I was a little preemptive with my analysis on dollar Singapore, because I was assuming that the current candle was, no longer a factor when it clearly is. Let's zoom in a little bit. Okay. Maybe there's still time to enter at the beginning of next week. But let's wait till this down move ends. Now let's go back to euro yen. Also, as a reminder, I do have that short Aussie Kiwi order on. So if that gets filled and this got filled, I'd probably close one out right away, even if it's had a small loss, because I don't want to risk more than 1%. Okay. Let's go to the weekly. Why is that? I think I need to delete one of those lines. Zoom out a little bit. And go to the weekly. Okay, I see. So this black line is the real support level. Let's make this a little bit thinner, just to illustrate that it's daily. Okay. So let's say I entered at, let's do this on the weekly chart. I enter at 137.80. I've got the stop. Let's put it here, 134. Is that where it needs to go? Let's see if we can put it here. So this would be risking 250 pips about. So is there 700 pips to the upside? 750. Okay. So I'm just concerned that there's just not enough room to the upside here, really. If we enter at 137.80 and the stop is at 135.50, that's 230 pips, basically. 230 pips times 3 is 690. So let's say 700. 137.80 plus 700 puts us at 144, right? 144.80. Oh, that does work. Okay. Okay, so this is it. We'll target, will be more than 3 to 1. It's going to be a small position because so the trade-off of the weekly chart is, you know, it's going to be a small position because I'm only risking 0.25%. The stop is really far away because we're going off the weekly chart. But here is the trade we'll be putting on. And I'll have this documented on my blog on InformedTrades.com. So I'll add this order, and like I mentioned, if my short Aussie kiwi trade gets filled, then I'll cancel this because I don't want more than 1% at risk at the moment. But yeah, short euro, or excuse me, long euro yen at 137.80, stop at 135.47, take profit at 144.81. Have this on my blog on Informed Trades. That's about it. If you have any questions, anything you want to add, join us at InformedTrades.com. Thanks and best of luck in your trading.